Ever felt that familiar knot of anxiety in your stomach when you think about applying for a business loan? You're not alone. For many entrepreneurs, the thought of securing funding is often accompanied by a big, looming question. How much do I need to put down? It's a completely valid concern, especially when every penny counts in growing your business. You might be envisioning a huge lump sum that feels utterly out of reach, or perhaps you're just unsure if you even need a down payment at all. We're going to explore what a down payment actually means in the context of business loans, why some loans require them and others don't, and crucially, what Lendio's network of lenders generally expects. We'll break down different loan types, examine the factors that influence down payment requirements, and provide you with actionable insights to navigate your funding journey with confidence. By the end of this, you'll have a clear picture of what to expect when seeking a business loan through Lendio, specifically concerning that all-important initial investment. First, let's clarify what we mean by minimum deposit in the world of business loans. Unlike buying a house or a car, where a fixed percentage down payment is almost always a given, business loans can operate differently. Sometimes, what might be considered a deposit is actually collateral, an origination fee, or even just your existing equity in the business. A true down payment implies an upfront cash injection from you, the borrower, directly reducing the principal amount of the loan. While some traditional loans, especially those for large asset purchases like commercial real estate or certain equipment, will indeed require a direct cash down payment, many other types of business financing are structured without this upfront cash requirement. Now, let's talk about Lendio specifically. As a marketplace, Lendio doesn't set the down payment requirements themselves. Instead, they work with a vast network of lenders, each with their own set of criteria. This is actually a huge advantage for you, the business owner. Instead of painstakingly researching dozens of individual lenders, Lendio's platform allows you to submit one application and get matched with various loan options from different providers. So, what are some of the common loan types you might encounter through Lendio, and what are their typical deposit or down payment characteristics? Let's start with term loans. These are perhaps the most traditional form of business financing, providing a lump sum of money that you repay over a set period with fixed interest rates. For smaller, unsecured term loans, a direct cash down payment is often not required. Your eligibility will primarily depend on your business's revenue, time in business, and credit score. However, for larger term loans, especially those for significant capital expenditures, a lender might request collateral, which isn't a cash deposit, but rather an asset, like equipment or property, that secures the loan. In some cases, for very substantial term loans, a lender might ask for a percentage of the project cost as a down payment, but this is far less common for the general small business term loans facilitated by Lendio. Next, we have SBA loans. The Small Business Administration, SBA, doesn't lend money directly, but rather guarantees a portion of loans made by participating lenders. This guarantee reduces the risk for lenders, making it easier for small businesses to access capital. SBA loans, particularly the popular SBA 7A and SBA 504 programs, often do come with a down payment requirement. For SBA 7A, loans used for business acquisition or expansion, a down payment of around 10% to 20% is common. For SBA 504 loans, which is specifically for purchasing or renovating commercial real estate or equipment, a down payment of at least 10% is usually expected. The exact percentage can vary based on factors like the type of project, the lender, and your business's financial strength. While these loans require a down payment, the favorable terms, longer repayment periods, and lower interest rates often make them a highly attractive option despite the upfront investment. Then there's equipment financing. If you're looking to purchase new machinery, vehicles, or technology for your business, equipment financing is a popular choice. In many cases, the equipment itself serves as collateral for the loan, which means a significant cash down payment might not be necessary, or it could be minimal, perhaps in a range of 0% to 20%. The lender essentially uses the value of the equipment to secure the loan. This is a huge benefit for businesses that need to acquire costly assets but prefer to preserve their working capital. Invoice factoring and merchant cash advances, MCAs, are interesting cases when it comes to deposits. For invoice factoring, You're essentially selling your outstanding invoices to a third party, the factor, at a discount in exchange for immediate cash. There's no traditional deposit in the sense of putting money down. Instead, the factor advances you a percentage of the invoice value, e.g., 70 to 90%, and then collects a full amount from your customer, remitting the remainder to you minus their fees. Similarly, a merchant cash advance is an advance on your future credit card sales. You receive a lump sum, and the lender takes a small percentage of your daily credit card transactions until the advance is repaid. Again, no upfront cash deposit is required. Repayment is tied directly to your sales. These options are often appealing to businesses with strong sales but perhaps less than perfect credit or limited collateral. Business lines of credit function much like a credit card for your business. You get approved for a maximum credit limit, and you can draw funds as needed, only paying interest on the amount you've used. For many lines of credit, particularly those offered by online lenders through platforms like Lendio, a cash down payment is typically not required. However, some larger lines of credit, especially from traditional banks, might be secured by collateral or require a personal guarantee, but not an upfront cash deposit. So, to directly answer the question, what is a minimum deposit for a business loan on Lendio? The most accurate answer is that it varies significantly by the type of loan and the specific lender in Lendio's network. Many online lenders offering short-term loans, lines of credit, business cash advances, and even some equipment financing options through Lendio may not require a direct cash down payment at all. For others, particularly SBA loans and larger commercial real estate loans, a down payment of 10% to 30% might be expected. In conclusion, while there isn't a single minimum deposit for a business loan on Lendio, the platform provides access to a diverse range of loan products, some of which require a down payment and many that do not. The specific requirements will depend on the type of loan, the lender's criteria, and your business's financial profile. Lendio's strength lies in its ability to quickly connect you with multiple options, allow you to compare and choose the financing that best fits your needs, with transparent terms regarding any upfront costs. Don't let the fear of a deposit deter you from exploring your funding options. The right financing could be the catalyst your business needs to reach its next level. With that said, thanks for watching, and until next time.